Hello guys, welcome to the 3D market commentary for today. Today is April 15th, 2021. You should know the year, so hopefully the day is a good reminder. My name is Becky. My email address there is becky@tradictive.com, so you can email me if you need to, any questions or anything. There's also this right here, which is tradewithufos.com/Becky. That link will take you to, I'm just going to bring it up. That link will take you to here. Now, the good thing about this is you can sign up for a free Trade with UFOs membership at the top there. And once you've done that, you can scroll down and ask questions in a public area. That's great because it means other people can see the answer and we can all sort of learn from it together as a community. You might find that the question that you have has already been answered anyway. You might come down here and see that the question you have already has an answer. Because it's in public, you've got to have the answer. So if it's not there, you ask the question and somebody else has that benefit. So hopefully that makes sense. And again, you just sign up for a free Trade with UFOs membership at the top there. Okay, so let's just get back to the PowerPoint here and put the disclaimers there on the screen. Obviously important that you guys read the disclaimers, not just for legal reasons, but to understand what you can expect from these kind of videos, what they are. Essentially, they're a demonstration. We show you what we do and how we think about the markets. Totally up to you if you want to ignore that entirely, take it on board entirely, or something in between. Okay, so 3D market commentary, what is it? Now, what we do is we send an email out every single day, every single trading day. Looks something like this, and we go through various statistics in the markets, which obviously refer to what's going on the charts themselves. So the email that we send out goes through three major elements. So upcoming market climate or upcoming market direction. That is using this technology here. Essentially, we want to know, do we have probabilities to the upside? Do we have probabilities to the downside? Or are there not enough probabilities either way? That gives us an idea of whether or not we look to buy or go long, look to short or sell, or whether or not we do nothing. So with this app here, which by the way is a free app, AutoClimate is a free app, we can see that we have different colored dots, and some of them are thick, some of them are thin. Ignore the lines for now. So let's say we had a thick blue dot, like this one here. That tells us we have probability to the upside, which means we should be looking to buy. If we have a thick red dot, like this one here, that tells us we have probability to the downside, and therefore should be looking to sell. Or we have thin dots of either colour, doesn't actually matter. Those thin dots tell us not enough probability either way, so do nothing. So we're always answering that first question, should I buy, sell, or do nothing? And we use the AutoClimate to tell us that. So we're looking at market climate using the AutoClimate on each of these markets. We then look at buy and sell UFOs, unfilled orders, that's what that means. That helps us with our entries and exits, because what the UFOs do is highlight for us on a chart, say these ones here, these little flying saucers, and then we can see that on the right hand side we have prices highlighted. Those are showing us exactly where we have stacks of buy orders in this case. If they were red, it would show us stacks of sell orders. And why is that important? Because if we want to buy, we would rather buy with a big stack of buy orders. The more buying there is, the more likely it is to beat the sell orders and push price up. If we're going to sell, we want to sell with a bunch of sell orders, because the more selling there is, the more likely they are to beat the buyers and push price down. So we use the AutoUFOs to show us where we should get in and out based on where big stacks of buy and sell orders are. So we'll go through that per market as well. And then the last thing that we go through is market volatility. Essentially gives us an idea of risk to reward, because it gives us an idea of how fast price is likely to move, how far it's likely to move within given periods of time. Normally, the higher the volatility, the higher the risk. Could be also the higher reward. The lower the volatility, the lower the risk, or could be the lower the reward. So again, nothing right or wrong about it, it depends how you see it, but it gives us an idea of what we can expect. Now I'm just going to change my taskbar settings real quick, just to move that out of the way because it's distracting me. There we go. Okay, so let's come back to our charts here. There we go. All right, brilliant. So we're going to go through each of those elements per market. Now we're looking at futures contracts that represent these markets. So if you don't know what futures are, just understand we're looking at representations of these things, and we're looking at a daily chart for each of these markets. Of course, you may trade above that, you may trade below that, higher or lower time frames. Daily is kind of in the middle, that's why we picked it. So hopefully that helps you in some capacity, whatever way you trade. Okay, so first things first, let's look at the S&P. Now the S&P 500 is a collection of the top 500 US stocks, and we're looking at the futures contract that represents it, which is the ES. If you don't understand anything I just said, just understand that we're looking at the US stock market. Essentially, we're looking at a representation of the US stock market. Now with that, we can see in market climate, we have a confirmed upwards climate because we have a thick blue dot, probability to the upside. Now, usually this market would go up for 9 candles. I'm just rounding that up there. And we're on candle number 13. So what that means is, based on what usually happens, we've gone past what usually happens. Now, of course, we can go past what usually happens. We can fall short of what usually happens. This is just an average. It's a statistic. But it tells us what's more likely to occur. So if we've gone past what's more likely to occur, then by default there, it's less likely to keep happening. That's not to say we won't see this continue to move up. That's possible. It's just not probable anymore. It's more likely that we see a change in market direction based on what usually happens. Now, we don't really know. Obviously, we can go way past what usually happens. Sometimes that happens. That's how we get an average, right? But just bear in mind, we don't have the probabilities exactly where we want them to be, although we still do have probabilities to the upside based on the climate itself. Now, when it comes to buy and sell UFOs, we have nothing above us, no sell orders above us. We have buy orders underneath us here. The numbers for that are 4076.00 to 4052.25. And again, that's the price range where we have a stack of buy orders that are likely to turn price. If price was to come and hit this stack of buy orders, we would expect them to move price upwards. Okay, so market volatility, we would expect movement up or down in one day of 44.05 points. In 1 week, it would be up or down of 96.96 points. And in 1 month, it would be up or down of 201.84 points. Again, this is up or down. We use our climate and UFOs to help us figure out in which direction that's more likely to happen. For the time being, although it's not exactly lined up the way we want, it would be overall to the upside with the S&P based on the climate. Okay, so that's the S&P. Overall probability to the upside, although not exactly the way we want it to be, still overall to the upside. Okay, moving on to the next market, which is oil. Now, in the meantime, it says here about registering for courses that we do. We do courses in different things. Futures, stocks, forex. There'll be options and cryptocurrencies to come as well. And we do trading plans, backtesting, and psychology, which are a little bit different as well than what most people do. Now, most of our courses come with 3-month complimentary access to the apps. Now, AutoClimate is a free app anyway. You can download that for free once you have your Trade with UFOs membership. But the UFOs, because they are telling us exactly where to get in or out, these are a paid-for app. And depending on which platform you use, depends on the cost. But on TradingView, which is the one I'm using here, they're $34 a month. Or you can get them as part of packages or part of a yearly discount. So if you purchase one of our courses, a lot of which are maybe $34 or $89, for a lot of them, you'll get access to the AutoUFOs for free for 3 months. So even if you're just interested in the apps, that might be the better way to do it because you get a discount on it essentially for the first 3 months. Okay, so with oil, we have a confirmed upwards climate. We can see that because we have a thick blue dot. That tells us probability to the upside. Now, usually this market goes up for 7 candles, just rounding up that decimal place. Whatever the decimal place is, I'm going to round it up because we can't have a percentage or a decimal place of a candle, so I'm going to round it up. So normally it goes up for 7 candles. We're on candle number 2. So that tells us we have probability of a continuous move to the upside based on what usually happens. Now, when it comes to buy and sell UFOs, this might change things because we have sell UFOs literally just above us there, between 66.40 to 63.60. We have sell orders in that area. Now, what that means is we have a climate to the upside pushing price up, so we have buy orders pushing it up, but we have sell orders pushing it down. So we've got 2 forces competing against each other. Buy orders versus sell orders. Ideally, we want those things to line up. With an upwards climate, we want buy orders there, and we get in with those buy orders. In a downwards climate, we want sell orders there, and we get in with those sell orders. At the moment, again, we have competing forces. For me personally, I would keep out of that, just because if there's a fight going on, I would rather step back and see who wins, and then get involved on the winning side, rather than risk my money and waste my time placing trades where I don't have enough probabilities lined up. That's just me. Overall, probability is still there to the climate, to the upside. But like I said, be aware of those sell orders in the way. In terms of volatility, we would expect movement up or down in one day of 1.41 points. In 1 week, it would be up or down of 3.11 points. And in 1 month, it would be up or down of 6.47 points. So again, overall with crude oil, probability to the upside, but sell orders in the way. So more or less competing forces. Again, I personally would keep away. Okay, so moving on to the next market, which is gold. Again, in the meantime, it says there, if you need our AutoUFOs, you can subscribe to them directly. You don't need to have courses or anything like that to be able to subscribe and have this AutoUFO, which again is telling us exactly where we have buy orders and sell orders that are likely to change the direction of price. You can subscribe to them directly, monthly or yearly memberships. On TradingView, they're $34 a month, or yearly discounts, or part of the courses. Again, if you're looking just for the apps, maybe taking a course for $89, $34, something like that, that gives you access to the apps for 3 months, might actually be a more cost-effective way to do that. Okay, so gold, we have a confirmed downwards climate. We see that because we have a thick red dot. Now, usually this market goes down for 7 candles. We're on candle number 1. So we have probability of a continuous move to the downside based on what usually happens. Again, we can fall short of what normally happens. We can go past what normally happens, but we can use what normally happens as a predictor of probability. So with this, we do have probability of a continuous move downwards in gold. Now, when it comes to buy and sell orders, we have sell UFOs here. Numbers for that are 1815.2 to 1782.2. And we have buy orders here at 1652.8 to 1624.4. Now we're kind of in the middle, kind of closer to the sell orders, of course, and probability to the downside. So if price does move down, of course it's going to move further away from these sell orders. Wouldn't be surprised to see new sell orders create. At the moment, not really close enough to either stack of orders for them to have an effect today, but overall probability to the downside with our climate. Now volatility, we would expect movement up or down in 1 day of 16.18 points. In 1 week, it would be up or down of 35.62 points. And in 1 month, it would be up or down of 74.15 points. So again, that's what we would expect in terms of movement up or down in gold. Overall probability there to the downside at the moment. Just going to check the chat there, see if there's any questions. No, nothing. Okay, no worries. Let's move on to the next market. In the meantime, just to say, you may want to join us in our coaching and watch us trade live in the markets, placing trades, going through the methodology, start to finish. How are we using each of these components to get to the point where we place trades? You can do that on YouTube for free. We do a lot of sessions on YouTube for free. Or you can sign up for our advanced coaching, which gives you access to more of our time in a closed environment. That's only $21 a month. So up to you. Again, there's enough on YouTube. But if you want to be part of the closed community, we have more of our time. You can sign up for that as well if you'd like. Okay, so next market is the US dollar. Now the US dollar is responsible for about 80% of transactions worldwide every single day. So if you don't trade it, still look at it. It's still going to impact all of the other markets that we look at and more. So with the dollar, we have a confirmed downwards climate, thick red dot, probability to the downside. Usually the market goes down for 6 candles, and we're on candle number 7. So we've gone slightly past what is usual in terms of a movement to the upside, but we still have, movement to the downside. So we've gone slightly past what is usual in terms of a movement to the downside, but we still have probability to the downside when it comes to the climate itself. Now with buy and sell UFOs, we have sell orders literally just above us there. Numbers are 92.430. We have buy orders just below us here. That's 91.405 to 90.635. Now, again, we are in between, we're right here, in between 2 big stacks of orders. Sell orders above us, buy orders below us. we have a confirmed downwards climate, so probability to the downside. So that should mean that the sell orders work better because we have sell orders from the climate and sell orders from the AutoUFOs, so more selling than buying. However, we've gone down longer than what usually happens, which means we're probably starting to run out of steam when it comes to the sell orders. So that might mean the buy orders have a little bit more power. Now, ultimately, what I would be doing is keeping out of this and let these forces that are going to compete with each other, let them play out. Overall, there is a slight more probability to the downside. Now, just to show you here, just to kind of prove the point with AutoUFOs. This AutoUFO, the number's between 91.405 to 90.635. It's this one here. It's already worked a few times already. Price came in, hit the top of the stack of buy orders and went up. It then came back down, hit the stack of buy orders and went up again. So if it comes back down again, it may hit the stack of buy orders and go back up again. It may be that the sell orders win. Maybe it comes back up, hits the sell orders and goes back down from there. So just to kind of prove the point how buy and sell UFOs work. We expect buy UFOs to push price upwards if price comes back. And that's what we've seen here. We expect sell UFOs to push price downwards if it comes back. And that's what we could see here. So we'll see how it plays out. But again, overall probability there on the dollar to the downside, not enough for my liking because we've got enough or a lot of competing forces there. Now, market volatility, we'd expect movement up or down in one day of 0.31 points. In 1 week, we'd expect movement up or down of 0.69 points. And in 1 month, up or down of 1.43 points. Again, overall probability to the downside, just not lined up exactly how we would want it to be because we have these competing forces. Okay, so last but not least is Bitcoin, back to Bitcoin. So let's take a look at this. Let's just squidge that down. There we go. Alrighty. So on Bitcoin, we have a confirmed upwards climate. Thick blue dot, probability to the upside. Now, what we don't have is statistics to tell us how long that usually happens for. Back Bitcoin is a much newer, much younger product than the counterparts we've looked at. Of course, the US dollar, US stock market, gold and oil have been around a long time, which means on a daily chart, we have a lot of data to say what normally happens and what doesn't normally happen. In back Bitcoin, it's not been around long enough for us to have enough data points in order to say this happens usually or this doesn't happen usually. So we are on candle number 5 of a move to the upside, but we are a bit in the dark as to how long we would expect it to keep going up. Overall probability there to the upside with backed Bitcoin. Now with buy and sell UFOs, no sell orders, nothing above us. We have buy orders beneath us here at 61,622.5 to 57,997.5. So probability to the upside with climate and buy orders beneath us. So again, overall Bitcoin, probability there to the upside. Market volatility, we'd expect movement up or down in 1 day of 3,171.30. In 1 week, we would expect movement up or down of 6,981.29. And in a month, we would expect movement up or down of 14,532.71. Now, those are much higher numbers than the numbers we've looked at before. That's because Bitcoin or cryptocurrencies by nature tend to be a bit more volatile. Not a bad thing, not a good thing, depends how you see it. The more volatile it is, the more your risk is increased, but potentially the more reward you have. The less volatile it is, less risky environment, but probably the less reward. So it's up to you to interpret that depending on how you feel about risk and the style of trader that you are. Now, just to say, that actually brings me on to this last bit here, which is the weekly economic calendar. We look at fxstreet.com/economic-calendar. We look at this. We then filter by high impact news. We don't care what the news says. We're not going to try and interpret the news to subjectively decide whether or not to buy or sell. We use objective technology and statistics to help us decide whether or not to buy or sell. But understanding that we have high impact news coming out lets us know if we're about to see a bit more volatility in the markets. And again, you might be somebody that hates volatility, in which case you decide, let's say, for example, today, if we have US dollar news coming out, would have already come out now. Maybe you say, I'm not going to trade anything related to the US dollar today. You might be somebody that knows that completely, that loves volatility and goes for it. You might be somebody that's somewhere in between and says, maybe I'm going to reduce the amount of trades that I place, or I'm going to limit my risk percentage per trade. different ways of looking at it. But you can use the economic calendar to be aware of exactly what's happening, the reports that are coming out that day or that week or that month that are likely to cause impact on the markets. Okay, so just to say, if you have any questions and you want to self-schedule a clarification call, you can click there and you can talk to us about, I want that app, so I didn't really want a course, but if it's cheaper, maybe I should do that. Which course is best for me to take? Coaching, can I just watch the stuff on YouTube and have a free membership, or is it worth me doing the coaching? Depends what I really need. And you want to talk that through with somebody and figure out what you need as a trader and therefore which resources make better sense for you, whether free or paid or nothing, then you can self-schedule a clarification call, speak to one of our experts there. You've also got my email address is becky@tradictive.com, so you can email me on that if you have any questions, or as I say, preferably you would come to here, set yourself up with the free Trade with UFOs membership, and then ask a question publicly so we can answer it publicly and everybody else gets the answer from it. So that's me done for today. Hopefully this was helpful in terms of the probabilities that we expect on these 5 major markets that we're looking at. I'll be back tomorrow to round off the week, so I hope you guys have a good trading day, and I will see you tomorrow. Take care.